Hey everyone, this is Garrett Goggins, Silver Stock Analyst. Today we are doing some technical analysis. We have Patrick Karim joining us. He's with BadCharts. Basically, I followed some of his charts online. He's had a really good feel for the precious metal sector. He does some great silver charts. So I just wanted to, do a little interview today to get it up there. Hey Patrick, thanks for joining us today.
Hi, Garrett. Thanks for reaching out to me.
Yep, no problem. I'm glad we were able to arrange it. Thanks. We were speaking a little bit before. I focus on, the silver miners fundamentally. You focus on precious metals. You've done a lot of good silver charts. I just want to talk to you regarding your outlook of the silver sector, the silver price, over the short term and long term.
Yeah, well, that's it. The first step there, whenever you're there's noise and daily movement, you just take a step back and you pop up the yearly chart. And then after that, you say, okay, here's where I am. Am I cheap? Am I at the low band? Am I expensive? Am I hitting yearly defined resistance?
Right.
And right now, well, before this crazy move, when we were at 1718, we were just completing a higher low on that super duper long-term chart, that 40-year chart. So that's extremely bullish. And I think even the year before, so in 2019, we closed above an important yearly defined resistance. I think at 1750 or something like that.
Do you have a chart you can show us?
Yeah.
Perfect.
Hold on.
Yeah, so you do a lot of charts on Twitter. You got your website, BadCharts.
So here it is. Here is the. Do you see it fine?
Uh huh.
Okay. So this is the go-to chart that told me that we're on the good track. Silver, you see the volatility of silver, it's these wicks. So crazy swings on the monthly chart, weekly, daily. It's all this noise. But at the end of the year, the market says, okay, we're closing at 31. We're closing here at 31. And right now, that's the target right here. Here's noise. This March Madness was kind of crazy because everybody, crazy swings, but somebody was buying gold or had.
I called that bottom right when it happened. I loaded up my portfolio. I bought tons of SLV calls right on March 17th. And I sent out a note to subscribers. I'm like, this is it. This is the time we've been waiting for. Silver traded at $12.50, on that day. I'm like, boom. So far, so good.
And not a lot of people could do that because there's fear. Only the people in the know, Garrett, you've been doing fundamentals and you're technical analysis for the precious metals market. Once you've done your homework, you've practiced all these years, you see it when it's unfolding ahead of you, and you start seeing the price going up, and you know that's a bottom.
Correct.
But most investors, they're scared. They sell, creating margin calls, over leverage, and it creates these wicks. While you guys were loading up, most of the people, the retails, we were selling and we were scared. And
yeah. Well,
now,
we talk about this. I think we're right in the same period as 2011, except it's going bigger and it's going faster. In 2008, market crash, Fed stepped in with a few $1 trillion of stimulus or a couple $1 trillion of stimulus. Right now, 2020, the market crash, Fed stepped in with $3 trillion, $5 trillion. It's the exact same thing, except it took from 2008 to 2011 from silver to go from whatever $8 to $50. The way I look at it is, once it crossed $20, it took silver 2 years after 2008 to cross $20, and once it did, and a year later, it went to $50. So right now in 2020, it only took about 3 months from March, April, May, June for silver to go from $12.50 back to $20. And then, with all the stimulus, who knows? Maybe 50, maybe 100, I don't know. But that's why we have Patrick here to talk about it.
And I think that's sometimes I look at the chart. I say, it looks like post 2008, 2009. But it's even better than that because I think we're getting that injection and we have the base.
Mm-hmm.
So now we have this 1, 2, 3, 6-year base we have right here. So we're getting a big base at 2003 breakout base, and we're getting this crazy liquidity injection that we didn't have back then. Here, I think it was just rates getting dropped and inflation expectations and stuff like that. So that's why it's super, super crazy, and especially the angle of entry into these arcs. So what I've learned is it's almost a perfect image here. You see that white candle? There's one red candle here. So the angle of entry base and angle of exit, usually it matches pretty much. So if this is a valid arc on the handle, we could expect a crazy year like that. So what we've seen right now, I think we're at 23 right now, 22, we're up here. And it's very possible that we're going to get a huge candle like this that's going to bring us all the way to 31. If not this year, early next year, I think we might get a close here.
Right.
So if the angle of entry is the same energy on the angle of exit, and all these buyers, there's nobody that wants to sell here. It went down so fast that most of the people, the weak hands, I think they sold out here at these lows, and some people might want to take profits at 31. And but until then, this is like a beautiful, powerful chart.
Right.
When everybody's scared that this is just going to drip down on the right side and the arcs not get respected.
Yeah.
Well, you saw what happened right in the past month. This is just respected the arc beautifully, and we should be aiming at 31 there by the end of the year.
Yeah, I've never seen like a larger cup and handle. Right. You see cup and handles like intraday or daily or whatever. But this is from the beginning. This is from 1980. It's a cup and handle from 1980. So, yeah, there's a lot of power that is ready to be released based on that chart.
So that's like the big frame picture. After that, then you could go have fun, and we could see on the daily chart, on our time frame charts, what we're dealing with. And let me check. So on the small charts today, and I think yesterday, we started having a pullback. Where's my charts? I do so many charts. It's insane.
Yeah. No, it's great. Yeah,
okay, maybe this one.
Obviously, we are due for a short-term correction, but with the way the silver and the silver miners moved just from yesterday to today, they've already had a good correction right here. And if it is indeed like 2011, the corrections are really short, So.
Well.
Yeah.
Exactly. Even we had because what happens right now is 2016 highs. I think they were like at the 2021.
Yeah.
So once we bust through that resistance, I call that a wall. So whatever was called resistance, it becomes a support. And I think. We went down, I think, all the way, we dipped to 22, I think, right? There was that like a midnight raid there when we were at 26, and then we went down to 22.
Yeah, already.
So now we started testing that resistance that's now support. Maybe we're going to get maybe another violent wick. A silver, you never know, could get down, maybe touch 21 and get bought up right away.
Yeah.
And after that, I think we're going to be off to the races.
Yeah. One thing regarding this chart is sometimes the strength when it's busting against its Bollinger Bands like that, it indicates more strength is ahead. People look at it and they're like, oh, it's overbought, time for a correction, let's sell. But look at 2010, 2011, it rode its Bollinger Band all the way up top to the $50 peak, and we've only seen one bar of that so far right now, right?
Exactly.
Yeah.
So what I want to do, and probably it's going to close just a little bit within the Bollinger Band, not to activate too much of this selling based on overbought indicators.
Yeah.
If we could close like right, even here, I think I've isolated in that we actually closed above the upper band right here, and we still kept going up for the next couple of months, right?
Right.
And that's why you have to take a weight of evidence, because even the months, there's some months that we closed within it or very close to it, and we still corrected. So you gotta. The most dangerous thing for newbies, like doing technical analysis, they take just one chart and they think it's a holy grail, but it's like it's the total weight of evidence. Look at the DXY index, look at the VIX, look at the GSR.
Yeah.
You got to look at everything. But when I'm in doubt, I just go back to that yearly chart I just showed you, and I sit back. I say, okay, Pat, whatever's happening now, it's 5% down. It's going to be 8-10% up. Then.
Yeah, but that first chart's great, but it's really long term, right? Like you're looking out to 2023 for the silver move. It just you need to have your time frame matched with your like exposure. And I'm with you regarding that too. I'm just telling people to, sit it out. Don't try to time this silver bull market because we're in a bull market. Like, don't trade it because you could miss the train, and just stay on board and you manage your volatility by having your portfolio properly diversified.
Yeah, definitely. You need to, because it's like the mentality, and I've done it before. People, they look at an entry and they over leverage.
Yeah.
Look, you could wait for pullbacks and buy it in fear, which is very hard to do for somebody who doesn't understand the precious metals complex, like you did buying in March. Not a lot of people could do that.
Yeah.
People, they wait for FOMO, and that's why they go all in, but they don't account for that. You probably are paying a little bit too much when you get in. At least you're in, but you have to account for a pullback. And most people, they can't even tolerate the first pullback, and they're oversized.
Right.
So I don't know what strategy you use there to ease in. Let's say you're like in a raging bull market. Do you have a technique where you want to put a little bit of your bullets and then add on the pullbacks?
Yeah, I've been kind of waiting here for a while. Like, I'm more bullish on silver now than I have been for years, just because of what happened earlier this year in the Fed stimulus. And, I nailed that bottom just because I figured it was like 2008 again. Oh, and what happened that day on like March 16th, March 17th, the GDX, right at the end of the day, it gapped down 20%. There was some give up seller that forced the GDX. It gapped down 20%. And, I was able to identify that. And just when the market is liquidating like that, that's usually indicative of a bottom. And that happened in GDX and that happened in silver at the same time. So, that was it. But, now that we're in like a bull market that powered by trillions and trillions of dollars, you got to ride it out. I don't try to time it at all because I don't want to miss the train,
I agree. It's and from people I've listened to, like in these, if you catch, like you're going for the whale. I call this like a whale moment. Mm-hmm. Like this is the 1970 people always talk about the late 870s, but it was the bull market actually started in the late 60s.
Wow. And
there was this crazy gain. You could have had quarter over quarter of the green candles. And if you're trying to trade that, you're going to miss out. You're probably going to have to buy higher. You're going to stress yourself out.
Yep.
Instead, you should just have a full holdings and add whenever you want, whenever there's pullbacks or you want to optimize a little bit, and just keep adding on until the trend tells you that it's time to stop. Because I look at these charts on the daily chart. Maybe I could find that.
That chart you just showed, I like that chart. Because, you've got like 12 bars. Of it extends and extends and extends. We're only at what was it, bar 2 or something? So
for silver, we're just at the we're closing the second quarter. So March was closed red. So now the June quarter just closed green, and now we're working on the second. It's just the beginning for silver. So it's like people are at the end of the ride. The ride could be for many quarters for
those
at
all
least
lock limits.
Yeah, so I put lock limits because and this is like an old trader on another website there on Gold Tent where I post it. He says, Patrick, I traded the 1970s bull market, and he says it was lock limit. He says in half an hour you would jam and the whole day's trading, and I didn't quite understand that.
Yeah.
And usually when I used to pop up that chart in the daily chart, I said, what are these dashes? And I just put a line chart because they annoy me. But now I understand these were actually days after days after days of lock limits.
Oh my God.
That is insane.
That's insane.
On the way down also. But on the way up, it was like, which one is this? Yeah, the first part of the bull market 79, lock limits, huge gap ups. So if you try to trade that, I think you can miss out on the once in a lifetime opportunity.
Yep.
This 1974 bull market giving still lock limit, up. And I kind of got that feeling with those 7% days we had recently. Mm-hmm. It's these kind of feelings, right? We're starting to get here. Lock limit, severe pullback, lock limit, pullback.
Yep.
And one day I think it's just going to rip higher. So you got to have some chips in the game right now. Silver's at 17. I don't ever see it going below 14 or 15. It's dirt cheap. Don't put yourself stop too close.
Right.
And just keep adding on right now there.
Right.
But everybody their own management, I guess, their own risk profiles. So you can't, you got to take in consideration that you could have a 10, 20, 30% correction over a month for silver. It's not out of the possibilities.
Correct.
But
if we
this
are
is
indeed
the
in a
type
bull
of chart.
market, if we are indeed in a bull market, it's going to be higher than it was a month ago. In a month.
Yeah.
Yep. What
Exactly.
Do you have any shorter term charts like dailies or anything about silver?
Yeah. What I could do is maybe I could share my chart. Let me see if I could do that.
Yeah. Okay.
Are you the chart change?
Yep. Mm-hmm.
There's the video.
Junior silvers. What?
This is kind of a watch list I'm looking at for the macro health of the sector. So the VIX, I want the VIX to keep the volatility going down because I don't want the market melt down anytime soon. That could probably hurt my stocks.
Yeah.
I'm looking at the Chinese index, and also these are risk on charts I'm looking at. So the Russell was down this morning, but it's getting bought up the dip. So I think that's very bullish for stocks.
Okay.
The Chinese index also commodity driven, silver driven for that. I'm also looking at the Chinese index. I want to make sure that it's staying afloat.
Yeah, in 2011, when silver really skyrocketed, the market held together. It had one or two sell-offs, but it was higher at the end of the year than it was at the beginning of the year. Pretty steady march higher.
Here's my daily chart for silver.
Okay.
This is the big base we had here, volume defined base. So these are all the transactions that happen at this price range. And this is when I saw the vacuum here. Here's where I was getting jittery right here. And I said, okay, man, this is something about to happen. We're above.
Right when that market profile starts rolling over, right?
Yeah. And then I said, okay, it's go time. We weren't sliding down. The moving averages were going up. It's pretty simple, not too many indicators. And then we just had these crazy weeks. And right now, 26, hitting just resistance. It's a natural process. We're going to probably sideways move. See, it's trying to find going to collect either size of time, letting that moving average catch up, providing a better risk to reward entry here.
Yeah.
But there's no, if I could zoom out, I'm going to show you there's not that much resistance.
Yeah.
Right.
Yeah, there's nothing
daily. There. There's no, the resistance it dates from that 2013 fall. And even there, I'm going to let it calculate a little bit. See, it's pretty empty.
Oh my God.
So there's not much volume right here. So there's time. All these guys aren't here anymore. And right now, maybe here a little bit, what I call a volume node at 29, 31. We might start hitting some resistance or some people that want to profit. But it's a vacuum. We're still in the vacuum. So there's probably a couple of bucks to get that are going to be easy to get once we're past this. Maybe we're going to do a halfway flag right here and then continue upwards.
Yeah.
But it's a vacuum. It's the hard work was done here. So all the hard work, the years of patience where the silver bugs gave up and silver's crap, it happened here. And to play for your money even more, there was that March madness that whatever hope I had here, because I remember pre-March, I thought it was going to explode pre-March.
Yep.
And then when I saw this, it's like, what do you call it, capitulation there?
Yep.
Everybody gives up, and it's the end of the world. Those gap downs, like you said, on the JDX and all that. And actually, that was an exhaustion drop, and then it never looked back.
Right.
So it's still pretty much clear skies, but we have to be reasonable. It's good to let the market, digest some gains.
Yeah.
But there's still no overhead resistance there until we start even climbing higher and higher. It's just looking so good, It's
no resistance, just blue skies ahead. And when we were looking at it on the shorter term, closer in, look at that candle was ridiculous. A couple days ago, it went from 26 to 22 or something like that. Yeah.
These two candles there.
Yeah, that
the
one.
21st, 22nd.
Yeah, and you don't even see that went from 26 to 22ish. Yeah. And you're not even going to see that candle on a daily chart. You know what I mean? All you're going to see is that price. You don't see the volatility in there. So we've already corrected from 26, like 50, all the way down to 22. That's a 20% correction, like boom, and we've had it in 2 days. So, we're probably closer to the end of this correction, near-term correction in silver than, the beginning of it. I don't think we're going to have months-long corrections during this bull market in 2020.
This is like the distance from the 50-day moving average.
Yeah.
Here we're pretty extended,
Yeah.
but now it's deflating. So the closer we get, at any moment, the market's gonna say, okay, you're close enough. You're in a bull market. In the bull market, you don't always test that 50-day moving average. You stay always afloat. So maybe here, around this area here, when we deflate to this area here, maybe 10% above that 50-day moving average. If the other macros look good, that's probably a good fear entry. A lot of people may be giving up on silver right here, and then that could just end up being a wick, getting bought up, and then you bounce off. Letting also, there's the stock maybe reset a little bit, and then just continue upwards.
So you're looking at
so maybe
yeah. Go ahead. I'm sorry.
Here.
Okay. All right. So a little bit below 22, 21.80 for silver futures, and silver futures are trading at what, 23 right now?
23 at 35.
23, 22, 21. Okay. A couple more dollars down. That could happen tonight. It's, yeah. Like, that definitely could happen, but I think it's going to be quick. Yep.
But yeah, every one of these moves that silver always played with your patience. Because even here we peaked a little bit away, and then it just went down. Slowly, it went down and then consolidated, coil.
Yep.
And you could use the same type of imagination here. I always try to something like that.
Yeah.
And then it could start bouncing and then coiling and then bouncing up on that trend line. The 50-day moving average keep going up.
What does that bring you out to? What's the dates down the bottom?
The dates, it's
for that coil. Like, I can't see the dates down the bottom.
This one here.
I'm wondering how far.
May 18th. It peaked on June 1st.
The one right now. The one that's the coil that's just beginning right now. Yeah.
So mid-August in 2 weeks. 13th of August we're probably gonna hit the bottom.
What about the other end of the narrow end of that bull flag? Off to the right.
Like right here?
Yeah, very narrow end. I'll go further over. Over a little more.
Here?
Yeah, right in there. Yeah, what's that? Is that the end of August?
Yeah, mid-August.
Yeah, okay.
In 2 weeks.
Yeah, that's only, 10 trading days, 10, 12 trading days. Yeah, so we definitely could get another bull flag there into middle of August, and then, hopefully game on again. That would be nice.
It's in the bull market, it's bull flag after bull flag, and
yeah.
It's, until the higher trend, you see that you're starting to roll over the 1 year moving average.
Right.
But people are going to be scared here. I guarantee you on your Twitter, people are going to maybe throw insults at you. It's the silver's no good. I'm giving up.
Yeah.
And right when people start doing that,
yeah,
it blows up. So
right. How
high? A great entry right here.
How high do you see silver going over the longer term?
Well, he's gonna have my 58. Okay, so I have two targets for silver based on the yearly chart. I have my linear target, so I'm adding from that big cup and handle from the bottom to 31. Adding on top, it gives me my $58 target.
Okay.
But then after that, somebody told me I could use percentage moves. So on the log chart, if I take let's say from $2 to 31, what's a percentage gain of that? Added on top. And then I get a $250, $260 target.
Yeah.
But
yeah.
I don't want to throw numbers out.
I'm sorry.
I want to throw $260 target out. We're not there yet.
Yeah.
But charting wise, if we close above a yearly close above 31, that's a possible measure move.
Right. I feel the same way. I've never really been that. That out there regarding the price targets, kept it pretty close to the vest. But you know what? The stuff that's going on so far in 2020 is like the most ridiculous stuff that I've ever seen before in my entire life, right? You get Tesla going from $300 to $1,500. You get Kodak, basically a bankrupt company, going from $1 to, God, it went up to 50 yesterday or something like that. Just the stimulus that's pouring in is, you're seeing stupid things happen in this market. And, if it's happening to Tesla and it's happening to Kodak, why not silver, right?
It's the natural, whatever they're doing to prop up the markets, silver and gold. Gold first sent that out, like when Powell did his pivot there back in 2018. Gold right away, okay, that's it. They flipped the switch. There's no more QT. There's no more interest rate hikes. Gold sent that out, and silver is more patient. It's really waiting. Okay, are they really going to go ahead with this money printing? And I think like the March Madness, it confirmed the deal that at least for the short to medium term, inflation expectations, that's what's getting priced in for silver, definitely, and the markets. That's why I want the markets to keep going up, because silver, it thrives, and it's going to outperform the markets. So when silver starts going up, you want your money in silver, but you want the markets to still go up at the same time. But that's some crazy times. And that's why I try not to think too much of the macros, like the headline news, because it's hard for me to interpret. But the charts right now, they support whatever thesis you have, justifying why silver goes up. The charts are there to tell you that it's a bull arrow for the precious metals market there.
Right.
It's insane there.
Yeah. I agree with you. Yeah, if you're gonna chart, just chart. You can't have your economic view and stuff like that and try to influence your thoughts. It's just charting is just and technicals are pure technicals. It's best to leave them. Yeah. If inflation picks up, the market could go 100 to 100,000. But a Happy Meal at McDonald's will cost $20. So.
Yeah. This chart, you see that one? No, hold on. You see this chart? The VIX, DXY, GSR going down. So this chart is pretty much it doesn't always behave like that. It's like at the beginning, after liquidity injection, after like a big market scare. After a while, like gold and silver, they don't care what the US dollar does. But at the beginning, they kind of really react well to a declining DXY, whatever, like money they're printing that lowers the value of the DXY or debases it. It's really driving up silver and the gold at the beginning. After a while, once silver takes off, it doesn't really care. But that's why I'm have a big eye on the DXY, the VIX, and GSR. They're your best friends. They're silver's best friend. You want this to flatline, and once the VIX flatlines really low, 14, 12. Usually that's when silver tops.
Huh.
I don't know. Sometimes I try to put explanations behind what I see in the chart. Maybe I shouldn't. Yeah. It's kind of a dangerous slope for me.
Yeah. So you see the market going higher. You see the VIX continuing to decline. You see Dixie needs to continue lower. Yeah, I was just looking at this morning. I was looking at the 2011 period. What the Dixie, the dollar index. And the 10-year rate. Have you looked at the 10-year rate versus gold and silver?
Yeah, I looked at mostly at the real yields.
Yep. Mm-hmm.
And the real yield on the 30 or even at the 10, it's like it follows it pretty much hand in hand.
It does. It follows it like tick for tick, like on a short-term basis.
What do I have here? Yeah, this is the... Yeah, these I have the 5-year, 7, and 10-year.
Oh, yeah.
Yield, real yield. And when I can't even... Where am I watching? Where's 2010, 11? Right here. Yeah, as the yields go down, the real yield, gold and silver, they go up. So it gives it the initial push there to go up. And once the market senses that real yield are going to start going up again, ahead of time, gold sniffs it out, says, okay, look, this Powell guy, they're going to start raising rates soon.
Yeah.
And then gold tops right when the real yields start bottoming,
Yeah.
that's when we should get out.
Yep.
But I have a measured move for those real yields. The 30-year real yield is, I think it's still going to go down like to -6 and we're at like -3 now. So there's still a lot of I call it like fuel. I think there's still a lot of fuel to drive a gold 2,300. I don't know, 2,600 until we see this here. And are we ever going to see that, like the real yield going back up?
I know.
Maybe with the deflation, right, I guess.
Right. Yeah, with the amount of stimulus that they're pouring in and the whole economy is all based off debt, our government's based off debt. It's like, yeah, can you foresee, interest rates going up again in our lifetimes? The whole system would collapse, right?
It's a crazy time because I don't know what's going to happen if they raise rates.
Right.
Maybe because
they're unable to. You hear a lot of smart guys talking about a spike in rates, and they want to get short bonds and all this stuff. But it's been a straight line down for 12 years already. I don't see anything that's going to change it.
Maybe runaway inflation, like 10-15% inflation. Well, they'll have no choice. Maybe
gold would be at $10,000 though at that point. Then we won't care.
Well,
we'll be happy.
Exactly. That's why I tell people buy gold.
Yeah.
If there's deflation, even if your gold's worth less, that means your purchasing value is still protected. If gold was worth 20K, well, you're still protected against inflation.
Right.
It's a win-win situation with owning gold and silver to a certain extent there, because it gathers the inflation portion there to get that boost, that industrial demand, etc.
Right.
But you got to protect yourself against a fiat currency debasement there. That's just unavoidable.
Right. And especially compared to having a portfolio of stocks and bonds, and with bonds, negative yields and the prices are so extremely high, and with the inflation and the debasement, they're becoming uninvestable. Whereas gold is taking their place, because the hit on gold has got no yield. It costs money to store. Well, you can say that about bonds too. It's got a negative yield, and you get nothing back. Yeah.
True.
Yeah. All right. Cool, Patrick.
I've never understood bonds there for what you're giving me 1% per year. Like it's the easiest thing to beat is a bond. The performance on the bond, the yield. It's a no-brainer there that you should be using gold right now, especially those negative real rates. You should be in gold instead of those bonds there. Right.
Yeah, absolutely. Especially in recessionary times when the Fed's pumping. It's a good time to own gold, and not a good time to usually not a good time to own bonds, or the stock market for that matter. But yeah. All right. I appreciate you joining me today. That was a good interview. We covered a lot of stuff. Is there anything else that you want to talk about?
Well, just that like gold and silver have been outperforming like the U.S. equities, the Dow Jones since 2000, 2001. It's a bear market rally that we've seen in 2018, like the Dow Jones tried to make a rally against gold and silver, but it peaked out versus gold and silver in 2018. And now we're just resuming that downtrend of U.S. equities. Even if they go up, like you said, nominal values, the Dow could be worth 60,000 nominal value, but gold's going to be right there, 1-to-1 eventually, right?
Right.
So you got real assets, hard assets, and it's a sure bet. No matter what situation you're in, it's you can't beat real.
Real assets. Spoken like a true Canadian, right? Yeah. All right. Cool, Patrick Karim. If you want to learn more about his charting, just go to his website, badcharts.com, right, Patrick?
That's right. Badcharts.com or Twitter, badcharts1.
Oh, yeah. Follow him on Twitter, too. Excellent. Cool. All right, Patrick. Thanks a lot for your time. We'll talk to you soon.
Thanks, Gary.